Hello folks, welcome to Pro Trader Strategies market commentary for Monday, May 3rd. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I also talk about the option strategies I'm implementing into my portfolio based on those assumptions we come up with in that market analysis. Further, for you folks out there, I have streamlined the process for you to find the optimal option strategy for any given assumption. What we do is we look at the pricing, we determine if those prices are expensive or cheap in the options, and then that is ultimately going to lead us to the right option strategy for our assumption. So please check out those guidelines that we've set up for you folks in those daily in those webinars, please. All right, so let's get on with the economic data across the pond. This is going to be a busy week for economic data. We've got the non-farm payrolls at the end of the week, but throughout the week here, we've got some pretty good economic data, kicking it off today with some PMI numbers, Purchasing Managers Index. Now remember, these are the final tabulations here. We got the flash estimates a little bit a while ago. They were all pretty decent numbers here. We're still seeing that continuation, not really much of a revision across the pond for those PMI numbers. Now we move over here to the United States, and we got our Institute for Supply Management PMI number. Now I've talked about this. This is Purchase Managers Index, forward looking. Anything above 50 is expansion, anything below 50 is contraction. Across the pond, both the manufacturing and PMIs from Europe and France, Italy, everybody coming out with inline expectations above 50, so that's good. Here in the United States, we were expecting 65. It came in at 60.7, so lower than expected there. And these are the numbers I've been talking about last week, where we're seeing these manufacturing numbers get real mixed bag here. Again, it is above 50. That is good. It's in the 60s. I like to see that, but it did miss on that headline number, so that's going to cause a little bit of angst. Now, we layer on top of that all of the earnings. I think we're well over 50%, not well over, maybe 60% of earnings are already being released, and we're seeing that those guys are coming out with better than expected earnings. And at least this time, remember last round of earnings, we weren't getting very good forward guidance. A lot of the guidance was very vague. This time around, we're getting a little bit more clarity there. Now, are they a little bit ahead of themselves based on the spending patterns of the consumer? Well, they just got a big tranche of money that probably wasn't necessarily needed, but all of that could be throwing off some of these guidances for these companies that we just might not see that much robustness happening right away. I do still think towards the end of the year, we're still going to see these roaring 20s when people start breaking out and spending that money, but it seems like it could be a little bit vague on the timing of that at this point. And then we got construction spending really missing, coming in at 0.2%, expected to be 1.7. So not a lot of construction going on, or at least the expectation that they are going to start new projects here for construction spending. And then we got the ISM manufacturing prices paid coming in hotter than expected at 89.6, expected to be 86. So showing a bit of inflation there coming through in this prices paid number for the Institute for Supply Management. Finally, we got vehicle Wards vehicle sales coming out all day today. You're going to have to really keep an eye on TV really to find all of those as they release those as they come out. Each individual car maker will generally do that. So we'll keep our eyes out that. And then we've got Powell and Williams speaking later on. Keep in mind, volumes could be a little bit lighter than expected because we do have a Japanese and Chinese holiday today. So that has a tendency to limit some of the volume numbers that we see coming into the complexes. All right, so getting on to the markets, we've got crude oil here moving higher by about $1 on the day, showing some strength there. Probably based on some of that ISM numbers, those final numbers that we got from across the pond, better than expected, could be driving that market a little bit higher. We've got bonds moving higher by a half a tick. The equities, we're getting a real mixed bag. We'll talk about that here in a minute. But Bitcoin moving higher today, as well as gold making a nice big move. We talked about this several times last week when we were bumping up against this little line here of 1780. That's what we were talking about as that line in the sand that we drew in there as a support and resistance trend line there. Found a lot of support before. Now we found it as resistance. At least last week we were bumping up against it and settling below it. Today we got that pop above. Now obviously we haven't settled there, but a settlement above 1780 is sure to bring that 1800 handle into real possibilities here. As you can see, we just came up shy by about $1 this morning, but I do think a settlement above this 1780 is going to reinvigorate the bulls to get that back up into an 1800 handle here. All right, VIX is moving higher. We're seeing again this sector rotation with the Dow Jones really knocking it out of the park, up almost 300 points as of right now, just climbing, as we're seeing the NASDAQ really see some weakness. So we're seeing this sector rotation. AMD, some of these tech stocks really starting to suffer here. We're also seeing some of the reopening trades start to do very well, and that's going to be kind of that rotation out of tech and into more blue chip type stocks, and that's kind of what we're seeing as this rotation today, and I think we're going to continue to see this. We've talked about this in the past, where the equities are not moving lockstep with one another. It has a tendency to get this rotation out of some high risk that have had high flyers during the pandemic, and now rotating into some of these stocks that may not have the multiples because of their connection to a reopening of the economy there. All right, and E-mini S&P is moving higher. So we've got the Dow, we've got the E-mini S&Ps higher. Dow absolutely leading the charge to the upside. And then NASDAQ at the same time, we're seeing Dow Jones make new highs. We're seeing NASDAQ make new lows. So I think we're going to continue to see this kind of volatility throughout the rest of 2021 as the market really tries to shake out all of these overweights to underweights and, too high of a multiple and back. Something also driving this market today was Warren Buffett literally throwing the new generation of investors under the bus with the SPACs, calling them ridiculous, talking about Bitcoin and saying that he just absolutely doesn't understand it, thinks it's something just wildly crazy because you're creating an asset out of thin air, all of those things. And he could be driving some of this market as well and reinvigorating some of these Robinhood traders as they see the old guard talking down about their investing prowess. That could get those guys ramped up and rallying behind one another. So we'll watch that play out today. And then I'm just keeping an eye on a couple of other stocks here with this reopening trade. I was expecting to see a little bit more of Southwest move to the upside, but we're not getting that, which is nice for me because I have on some long puts, as you guys remember, in the January. So I was keeping an eye on this thinking we might get a bit of a pop, but we're seeing some weakness here. I'd like to see a settlement below the 50-day simple moving average because I am long the 60 puts in there. So we're getting pretty close, just about $1.50 away from me being able to probably cover those, maybe $2 away really, because of the theta decay that's incurred in this trade. Keeping an eye on a couple other things. Also, we're watching Epic Apple Battle Royale today. It is kicking off in court. They're showing up right now. So we're going to have to really keep an eye on this because this is really going to be something that could affect Apple going forward. Remember, they take 30% of all revenues from these apps that are on their website, and they're trying to, Epic's trying to get that lowered to closer to 15 or something like that. So all of these things are going to be playing out in court in the next few days. So that is going to be a major determining factor in the valuation of Apple. Epic is a private company, so you're not going to get involved in that probably unless you have a SPAC. But with Apple, it could be really affecting their earnings. Now, they don't get a ton of money off of Fortnite in general, but one of the things that their point is that these newer, if you are a newer company trying to, get started, it's just a Sisyphean type of effort rolling that rock up the mountain that you can't make profits fast enough in order to sustain a business model, really. All right, so that's about all for today. I haven't taken anything off or really added anything, just kind of monitoring right now a couple of these stocks, as I think it's going to be kind of a quiet day, and let's see how this all plays out. Still a lot of earnings coming up throughout this week, so keep your eyes posted for that. We'll be trading those as well. And still have on my Amazon earnings trade. It is coming back off a little bit today. I have some short puts on. I'm not too concerned about those being in the money necessarily. If it does, I'd be happy to buy Amazon much lower, a few $100, several $100 lower than here. So I still have on the Amazon, and I took off the other trade that was kind of like a play to that one. So all in all, still in that one. Probably look to cover it sometime this week, but I'm not too amped up about covering Amazon right away. It's a good trade, and I think that we're going to continue to see this market move higher. That's all I got for you guys. Check out our webinar. We're doing a whole series on setting up option strategies around swing trades. So I show you how to spot swing trades really quickly, and then even streamline that process for you guys to trade options around that, finding the best strategy for your given assumption and your risk parameters. So we delve into that as well. All right. That's all I got for you guys. Other than smash that like button for me, it really does help. And if you have any questions, comments, or anything else, throw them down there at the bottom. I'll be happy to go back and forth with you on that. Make sure everybody's clear of concept. And finally, if you can't take that, take it easy.